There are certain terminologies you need to know about Forex. For instance, we have brokers in Forex. Okay, there's what we call brokers. We have the swap, we have spread, we have lot sizes. These things, you need to know them. You need to know how they work. It's very, very important. So if you are being asked, who is a broker in Forex? If you don't have the right knowledge, you won't know who a broker is. Now, a broker serves as an intermediary between you, the trader, and the Forex market. They help you assess these currencies. They help you assess the financial market in order for you to make profit or make losses. Okay, so a broker is like it's just like, for instance, we have the central bank and we have our normal local banks, right? So your broker is just like your local bank. You can access money through your local bank. When you go to your bank, they give you money. This money is coming from where? From the central bank. But you cannot go to central bank and start taking the money. And so your local bank will help you collect your money. So that is the way it is. So brokers will help you assess the market, and then they help you use your local currency. You buy dollar from them, okay, and you are able to trade. So that's who a broker is. Okay, there's also what we call spread in the market. Spread is like, the bid price and the ask price in the market. For instance, you go to the market to buy tomato. You ask the person selling, "Madam, how much?" The person will tell you, "I'm selling it for 20 naira if you are in Nigeria." And you begin to say, "Oh, no, this is what I want. This is what I want." So now, the bid price and the ask price is what makes your spread. Okay, you don't just buy dollar like that. There's a particular charge, is a small charge that will be involved when you are trading. So that small charge that is involved, that your broker takes, is your spread. You get what I'm saying? That small charge, that small money they take, is very small. That is a spread. Okay, and that is why some people don't trade some currency pairs like gold, especially if their money is very small, because the spread on gold is much. You must have some good money to be able to trade gold and some other high currencies. Okay, so now there's another thing we call swap in the forex market. Swap is simply the charges that your broker charges you for leaving a particular currency pair for a long duration. For instance, you are trading on a Friday, and you know that the trading days are only from Mondays to Friday, but you decided to leave your trade to be there till, let's say, Monday or Sunday, that the market is going to open again. Okay, so that period of time you have left your currency, on your trading platform, there are small charges, okay, your broker is going to take from you for leaving that trade. So that is what we call swap. I hope you are getting what I'm saying. If you know you have not subscribed, don't forget to subscribe. And if you have any questions, please let me know in the comment section. If you have any question as we are going along, let me know. If there are some things you know that you are not clarified about, just feel free. Let me know in the comment section and I'm going to reply you, right? Just feel free. You are in your home. Okay, so relax. I want to make forex very simple for you, very, very simple and very easy. Now, there's also what we call lot size in forex. Okay, and there's what we call pips in forex. Now, what are pips? Pips are simply the movement that you see. For instance, if you look at the chart, you see that the candlesticks are moving. You see them growing, or coming down, descending. It's either it's ascending or descending. So now, what makes this market move? The tendency that this market can move, I'm trying to explain in the simplest way, from one movement to another, is called a pip. For instance, you want to go to the market, or you want to pick up something that is a bit far from you. You take a step, 1, 2, 3, 4, before you get to that thing, right? So that is what we call pips. That step you are taking from one step and another is what we call pips. Okay, and there's also what we call lot size. Lot size is the amount of money you are willing to do or to put in to make more money from the forex market. You are either making more money when you put in that lot size, or you are losing more money depending on the lot size you have decided to give the market. Now, it might be a bit complicated. It might be a bit complicated for lot size, but let me break it down for you. Okay. Now, lot size, for instance, let's say you have $100 in your account, right? And you want to trade to make at least $500. Okay. Now, before you trade a particular currency pair, there is an amount of unit pair you are supposed to give the market to say, okay, I want to be making, if this market goes my way, I want to be making out of my $100, I want to be making at least $2 profit. $2 profit as it moves my way, $2 profit. Or I want to be making $5 profit as it goes my way. I want to be making $5 profit. Or I want to be making $10 profit as the market goes my way. And don't also forget that if the market doesn't go your way, the same amount you have put in as your lot size will also be taking you for a loss.